What do you think the ECB do here? Because their hands are really tied. They just had to justify ending quantitative easing to the market. Yesterday, we found it in the minutes that they're considering another round of bank liquidity operations in the form of TLTRO. I mean, what can they do here to actually stimulate the economy, given the economy is nosediving?
Well, look, they have the firepower, and we've heard from a number of ECB members in the last week about the possibility of the TLTROs, the bank lending, being extended later in 2019. But it's far from unanimous across the ECB. We've heard from Novotny, we've heard from signals from other parts of the ECB Governing Council that they're less willing to tolerate that. But from my perspective, it's not clear to me that the slowdown in Europe at the moment is as a result of credit deficiency. I think there are much more, to allude to your previous question, political concerns, not just US-China, but the slowdown in Italy, but also a set of unfortunate circumstances that have all coalesced at the same time, the auto crisis in Germany to the fore. And I think policy members, particularly the ECB, will want to wait in their communications before, for more data before committing to a forward path.
Right, but Simon, again, to pick up on that, the ECB say this over and over again, they have got one needle in their compass. They're supposed to be targeting inflation. If you look at metrics like five-year inflation, which is what the market expects in 5 years' time and 10 years' time for inflation to look like, that metric is running at multi-year lows. We're at around 1.4%, a far cry from that 2% target. So the market is indeed putting pressure on them to do something. Do you think the ECB may very well find themselves in a situation where they have no choice but to restart quantitative easing again?
Well, it's a question for the ECB on how much they value their credibility. But you're right insofar as if you take the five-year, which is Mario Draghi, the ECB president's preferred metric for inflation expectations, it's stuck below 2%. But let's be honest, it was also stuck quite comfortably below 2% throughout 2017-18 when growth was much healthier. There is a structural problem of low deflation. You look at the core inflation metric, it's averaged about 1 to 1.1% over the last 5 to 6 years. You know, there is a question looming for the ECB as whether, given the amount of monetary firepower that will be required to get to inflation sustainably back to 2%, whether actually they're prepared to deal with the capital allocation problems, the financial stability risks, the communication problems that would go with sticking to that, and therefore a decision is looming with or without all the other noise going on in the wider macroeconomy.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.